To another daily analysis video on Bitcoin. So yesterday we did get rejected off that weekly resistance level. Immediately my eyes go to the opposing side of liquidity. Since we have swept buy side liquidity, we've had our change in the state of delivery, and so this is now a weekly order block which provided the resistance yesterday on the New York reversal. So immediately my eyes go to the opposing side of liquidity, which are these relative equal lows on the weekly. So we mentioned on yesterday's stream the monthly levels that I was looking out for, and just to put that back into perspective, those relative equal lows on the weekly are also the monthly fair value gap, which is also the yearly open, as well as the CME gap at 92. So that still is my drawn liquidity. And when we look at the weekly, this rejection off this weekly order block is giving us the bias to these low levels, which we had spoken about earlier this week. In yesterday's stream, I mentioned with these highs getting taken out via SMT with Ethereum, I was looking for these lows to get taken out, and this Sunday low was the drawn liquidity. What I did not expect was it was actually what I thought at the time was just crazy manipulation. I mean, typically to target these relative equal highs, great drawn liquidity, if these lows had been swept, right? If sell side liquidity had been swept, I'd be looking for buy side liquidity to be targeted. It doesn't change my overall bias. This is still the weekly resistance level. But for an intraday trade, I would have looked for these relative equal highs to get targeted in New York if we had taken this level out, which we had not. However, when you go to the CME chart, which I just want to point out to make that point. So Asia had sold off directly into the CME gap, where London consolidated, New York then manipulated. So there was in fact a high time frame PDA which price delivered from. And so yesterday that liquidity, that drawn liquidity did get hit with Ethereum. So if we just bring up the Ethereum chart quickly. You'll see that that low was in fact taken out in yesterday's move. So I still think these lows will get swept. I do believe that the wick for the weekly chart is, well, the weekly candle is now in. Yesterday I assumed it would be, and to be fair, typically with something like indices, you know, had this this high been taken out via SMT with the correlated pair, with that shift in market structure beneath the weekly opening level, I would expect that level to have been taken out. In addition to that, I would have expected SMT with, you know, either this to be swept or SMT, which we got neither before trying to attempt to target these relative highs. But with the CME gap with Bitcoin, that was your high time frame PDA for price to deliver from. And once these highs were taken out, these previous day highs, this became a stronger drawn liquidity, right? So Sunday was the draw. The London low relative to the Sunday low is still the drawn liquidity. And in fact, the bias is now stronger than ever before since we had swept this buy side liquidity. So you look for the opposing side. And immediately my eyes just go to what we've already mentioned. These are basically equal lows. We then have a relative equal low there, as well as here, which is last week's low, and then the previous week low as well. So this is just sell side liquidity stacked, and this is where you could create that, you know, cascading sell-off type situation. And then to our weekly relative equal lows down here, as well as that monthly fair value gap, which is the ultimate target. That, in addition to the yearly open and the CME gap, is exactly where I'll be looking for price to go to. This volatility in the meantime, look, I think the liquidity conditions are very low at the moment, so you can expect these type of volatile moves. But don't be deterred on the low time frames. It's the weekly chart where you need to be paying attention, which is retracing into this bullish range for the relative equal lows. So there's all your sell side liquidity targets. This for me is the ultimate target. To get hit this way, I'll start paying attention, and to get a wick down right on to these lower levels on the weekly. That of course is the monthly fair value gap. And price could trade down to this level. Just because this is a monthly fair value gap doesn't mean price can't trade down to this level. So long as the monthly candle closes, the body closes above this level, then from a monthly chart perspective, that's perfectly permissible, right? As RCT says, the wicks do the damage, the bodies tell the narrative. So yeah, I would love for price to trade down to this level. People would get exceptionally bearish, and this is where a lot of people will give up hope. So if we had to have a wick down to this level and an immediate reaction, and then we close the monthly candle above this level, I'd be exceptionally bullish, right? You'll just be looking at this as a massive range, manipulation after the accumulation, and then distribution. And that is what I'm looking for. I'm still expecting a massive blow off top, but at the very least, we're going to get a bounce. And that is the whole crux of my trading plan going forward over the next few weeks and months. This bounce is where I'm looking to really capitalize on the last phase of the liquidity phase and the last phase of this bull market. So yeah, from a intraday perspective, this balanced price range is going to offer resistance. Since we expanded, then was met with expansion. That is reversal after we have taken out the previous day highs. And so this is where you look for price to trade back into, take out buy side liquidity, and look to trade to these lower targets. Until tomorrow, have a good one. Chat to you guys then. Cheers.